All right, maybe your dreams came true or your nightmares happened. I'm here for the second half. The cow guy is in the chair, taking over from Marlon Bowling. It's Market Day Report. Let's talk about these prices. It's been an interesting one as of late. Let's take a look at corn. Let's bring up the corn board. All I have to do is click on it. That's what they say nowadays, right? Take a look at corn, and we've got a what? Lower market. It doesn't look like it. And so all you have to do is sit back and say they must have put some precip in, right? Maybe. We'll talk to our next guest analyst about that. But July's down 2 1/4 cents now to 605 3/4. 4 cents off the lows if that's if you're going to try to be positive there. But we do see declines from December, the new crop on out. This is down 10 3/4 cents to 530 1/4. That's just 2 cents off the lows. And again, by a dime in March as well to 540 3/4. So corn to the negative right now. Let's take a look at beans. What do we have happening there? That's mixed. Got some upfront buying and some back month selling. July's up 9 3/4 cents to 1363 even. That's about 3 1/4 cents off the highs. We've got a Nove board that's down a penny though, 1183 3/4. And that's in the middle of the day's range, if anything, closer to the high than the low. But still, we've got some buying in the fronts, and the backs are kind of letting the air out right now. We've got Jan even off 2 cents, 1192 1/4. All right. How about wheat in Chicago? Chicago wheat, double-digit losses across the board. July's down 12 1/4 to 615 1/2, and that's about 2 1/4 cents off the lows there. Going out the deferreds to March, 14 1/4 cents lower to 659 3/4, and that's just 3 ticks off the lows of 659. From Chicago, we travel to Kansas City and see what the hard red looks like. We're 27 1/2 cents lower there. Wow, ouch. July's down to 792 3/4. That's a penny off the lows. Going out to the March, 23 3/4 cents lower now to 781, and that's a new low. Market's still trading easier. Let's see if we got any better news for us in Minneapolis with the spring wheat. And it's not as bad, I suppose, but still double-digit losses. 16 1/2 cents lower there in that July contract. Trying to hang on to that $8 line, eight bucks even. Nope, 7.99 3/4 is last now in July, and that's still about 3 3/4 cents off the lows. And then go out to the March, that's 17 3/4 cents lower to 8.12 even. And then finally, let's take a look at cotton. What does cotton have for us here? A 42-point drop in July at 84.92, and Dees is also off 49 points itself to 81.29. Let's bring in our next guest analyst, Riley Schwieger. He's with CHS. Coming to us from up north, and I believe it's in Grove Heights. It is. All right, Riley, thanks for being on. What do you got for us today, sir?
Well, if you're looking for some positivity, Energies are looking to at least give that to you today. Obviously, the big headline this week has been what came out of the OPEC meeting over the weekend. Saudi Arabia did announce that they are going to cut an additional 1 million barrels per day in July. For the month of July, that's going to give OPEC Plus a total of 3.66 million barrels per day that they plan on cutting. To give you some perspective, that's around 3.6% of global demand. There was also some commentary on how they'll be reallocating production targets going forward, which was a little bit of a bearish element kind of hidden in there. But ultimately, similar to what we saw the last OPEC meeting, when the market did gap higher. However, throughout the Monday session, that quickly erased. I think there's still some demand destruction fears weighing on this market, getting a little bit heavier with, as long as interest rates are high, it's going to be an ongoing fear. We also got a little bit of a boost from the inventory report today. Some of the highlights there, crude inventories were off just shy of 500,000 barrels. SPR was off 1.8 million barrels. We do have 8 million barrels left to release this month before that's all finished up with this recent quota. And then we did see production at its highest level since April of 2020 at 12.4 million barrels per day. Refinery run rates very high, trying to keep pace with obviously the driving season. Gas and diesel demand still hanging on to gains over last year's levels. Gas is up 1.8% over year ago demand, and diesel is up 0.6%. So that's what we're seeing today. Pretty strong day overall.
Oh, that's a lot of great information. I really appreciate you coming on and sharing that with us. That's Riley Schwieger. He's with CHS up in Grove Heights, Minnesota. We're going to go away. We're going to take a quick break, and we're going to come back and talk livestock with me, the cow guy, after this.